Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, July 30th. Hope you guys having a great morning so far. We do got quite a few economic data to go over today. Yesterday was a quiet day in terms of economic data. However, today is the opposite. We got quite a few to go over. So let's jump right into it. We'll start off with the personal income for the month of June. And in May, we had a 0.4% increase. Forecasters calling for another 0.4 increase, and it came in right at expectations. So good things are coming. People are getting paid more, which is obviously a good sign. We also got consumer spending for the month of June. We got 0.5% increase, which is obviously a pretty nice increase for May. However, it did pull back a little bit in June. As you can see, the forecast came in at 0.3 and it came in at expectations. So people are making more, still spending, but not quite as much in the same capacity as what they're making. So still a pretty good sign right there. This is what kind of keeps the economy moving forward as people are making more, but also spending that money as well. We also got the Fed's favorite gauge of inflation. This is the personal consumption expenditure, or also known as the PCE, for the month of June. So it rose 0.1% in May. Forecasts were calling for 0.2% for June. However, it only came out 0.1%. Now, if you look at it year over year, it remained at 1.4%. It didn't no change right there. Now, when you strip out the big ticket items, well, not big ticket items, but volatile items like food and energy, we have what they call the core PC or core inflation, is what this is also known as. And as you can see, it was zero point 0.2 across the board here, 0.2% in May. Forecast come for 0.2, and it came in at 0.2%. However, this did rise a little bit to from 1.5 to 1.6%. Now, this is important data because, as we had indicated, if inflation seems to be something that could be in trouble later on, especially with the Fed begin their two-day meeting, this could be opposed with them. If they're cutting rates, one of the reasons why they raise rates is to keep inflation in check. But however, the Fed does want this at a 2% rate, and we are below that rate of 2%. Currently, as I just stated, at 1.6%. If it looks like it could heat up, this could potentially hurt mortgage-backed security bonds and hurt things further erode because the bond's greatest enemy to inflation is inflation. I'm sorry, the bond's greatest enemy is inflation due to inflation's erosion of the value over that life term, which is obviously 30 years for mortgage-backed securities and bonds. So let's kind of jump ahead here on the calendar here. We got the Case-Shiller HPI Home Price Index for the month of May. So in April, it was at 3.5%, and however, it slowed up a little bit down to 3.4%. So, the media will probably spin this as saying, home prices are going down. However, they are going up, just at a more moderate pace. Obviously, this is something that the media likes to throw out there, but again, they have to keep in mind this is home prices are still, in the most part, on the macro level, are going up, but just at a more moderate pace. We got some really good numbers here. Look at consumer confidence for the month of July. In June, we had 121.5, which is obviously a very good number. We're calling for 126, and it well exceeded that. Look at 135.7. These are extremely high numbers. People are feeling really good about where things are at. So, as we saw with the spending and everything else, people are making more money. That's kind of rightfully so. Now let's look at pending home sales for the month of June. For our final item here, we had 1.1% increase in pending home sales in the month of May. However, in June, it increased to 2.8%. So we're seeing more people getting into contract on homes, which is purchasing homes. So as we are in the summer session, obviously this should heat up, which is obviously a good sign here. So let's jump over to the headline news here. Stock market is currently down. A lot of it is corporate earnings reports. We also obviously we saw the data there. We do have our two-day in China. We have the Lighthizer and Stephen Nugent, are meeting with their representatives in China today. This is the first time we've met face to face since the G20 meetings with the Chinese president and our president. This is obviously a good sign. However, the expectations are relatively low because we're about 90% way through the negotiations. However, that last 10% seems to be an area where neither side really wants to cave too much, so and really want to give up any ground. And this could be the sticking point that could be possibly prevent a agreement to be reached. So, well, that yet remains to be seen. We also had the FOMC begin their two-day meeting. So today they begin the meeting, and then tomorrow we'll see the uh, Fed Chairman Jerome Powell give his announcement, usually right around 11 o'clock, 11:15 Pacific Standard Time. He'll give his announcement. It is expected that he will be cutting rates, most likely a 0.25% rate. That is the highest part. There are some speculation of possibly 0.5%, but the majority, the highest, uh, most people believe it will be 0.25% versus a 0.5% cut in the rates. So, of course, they will be listening to what he calls for and possible future rate cuts. See where that might lie as well. Let's see how this is playing on the bond market, see what we're doing. Here's the bond market. We're currently only up about 2 basis points. As you can see, we have been we got this double floor of support. We have kind of touched off it a little bit so far this morning. As you can see, we've been, for the most part, been in the sideways pattern. We could, the Fed cut could be the one catalyst could move it. Another item I want to be watching for this week would be the ECI, which is the Employment Cost Index. This could be an inflation number that could move the markets a bit this week, because this could give us an underlying factor if wages are creating more inflation as well. And obviously, that's something we're watching with a environment where the Fed is cutting rates. We want to make sure inflation does not become out of control. And so far they're not looking at what the inflation news today is not seeming to be concerning them. As you can see here, the yields are testing its 25-day moving average. We're at about 2.06 right now, and it's in there right now. So mortgage rates, again, as you can see, there's not much movement. We haven't seen much movement over the course of the week, and so I'm going to say, mortgage rates have not yet changed. There still remains to be unchanged. So, if you guys are looking to buy or refinance, please reach out. The best way to reach me is direct message me or DM me. I am a loan officer. I work with a lender, CMG Financial, and we do lend in all 50 states. We cover pretty much everything from jumbo conventional, FHA, VA, USDA. But on top of all that, we do have a couple proprietary loans. We have the all-in-one loan, which is a fantastic loan program for those who are who have cash flow or not living paycheck to paycheck. This program that helps them to pay off their mortgage. I've seen examples of this, of people paying it off as little as 5 to 7 years, compared to and saving themselves hundreds of thousands of dollars. We also have the Home Funded, which is a fantastic down payment program for, especially for first-time homebuyers. However, it can be used for other people who have life-changing events. For example, someone who went through a divorce where one spouse gets the house and the other spouse has to now look for their own place. To people who have had, here in California, we've had experiences with wildfires, earthquakes. So now their home is destroyed. Now they have to rebuild or buy a new one, or hurricanes in other locations, or tornadoes. That's something that can help out those folks as well. And we've had people use as a registration for their wedding registry as well. So this has been a great program to help a lot of people get into homes on there as well. We also have some niche loans that many lenders do not offer. We got some that are specific for investors. We got some for a bank statement for those who are self-employed that may little too much deductions on their tax returns that could not really qualify, and the bank statement might be that to assist them. We also got foreign national loans. So if you're a foreign national, want to buy a second home or investment property, we got loans for those folks as well. All right. So if any of those, if you're looking to buy or refinance, need some assistance, again, go ahead and direct message me. You guys have a great rest of your day. Thanks so much for watching. Look forward to see you guys tomorrow. Bye-bye.